Read this disclaimer. Good morning, good afternoon, good evening, traders, depending on the time that you're looking at this video. I want to do this quick video, and my focus will be how to take a loss in trading. And I just took a loss, and I'm going to show you why. And then I'm going to speak to you quickly about how to deal with a loss in trading. Now, as you know, when you're dealing with money, there's a lot of emotions involved, you know. And in this market, you can make money quickly, you can lose money quickly as well. So, I spoke to you in my last video about gold and about the possibility of selling gold. And the reason why I wanted to sell gold was because if you look around this blue line here, you will see that the market have history of whenever the market comes to this blue line, it falls. And so I was expecting this market to fall, and so I decided to sell, right? I decided to sell. It gave me a nice setup. It went and touched the line, as you can see here, this candle high here. It went, touch it, and then it pulled back. And so, well, I decided I was going to sell the market, right? Because it's a candlestick formation. Well, lo and behold, it broke through the resistance and then it kept on going up, right? Now, I decided that, well, I believe that this market is going to go down. So I was going to fight the trade. It was going up against me. I was continuing to sell, which, for the most part tends to happen, tends to work out in my favor. But gold is a very volatile instrument to trade. And so I was like in three positions, and I was like, it is not worth it. It is not worth it to be holding on to this negative trade when there are so many other opportunities in the market. So I decided to just simply close my trade. Now I want you to see technically, apart from the fact that there is resistance here, I want you to see something here also, that there is this angle of support. I was pushing the market up, pushing the market up, pushing the market up, and it became resistance. It pushed the market down here. Depending on how you draw the trend, you could say push it down here, and it is now at the top. If I draw the trend a little bit steeper, then we could see that it did that. But however you look at it, this was very much also what's present. Now, I'm going to say this. I still very much believe that the market is going to go down. I fully believe that the market is going to go down still. It may go up first and then go down, but I believe that it's going to go down. But what caused gold to break out is that there is also something interesting that is happening. It's that the Feds are looking to cut the interest rate on the dollar. And if the dollar goes down, gold is going to end up going up. Gold is going to end up going up. And so the Feds have been talking about cutting the price, cutting the interest rate on the US dollar. And so it pushed gold up. As a matter of fact, I was reading this article, right, that sadly, the Federal Reserve Bank of New York boss moved markets Thursday, prompting traders to rush towards bets that the US Central Bank will deliver a half-point interest rate cut this month. So because he said this, that they're going to cut interest rate, the markets reacted to it. The markets reacted to it. And the US dollar went down and gold went up. Just as a little example, let me just bring up here. Here on Thursday, the US dollar just went down. And this simple move here results in this big move here. Gold just went up. So I was like, he says that they should count on the interest rate cut. Then here's what happened. Hours later, the New York Fed walked back his comments. So after saying that the interest rate is going to get cut, the markets responded to it. They no need to come back and withdraw his comments. And then we're like, oh, really no. So it went up. So this is what happened here. It pushed up, and pushed up. Only now after he took back his comments, it came back right down. And this is just how trading is. And so I was in one trade here, around here, right? The market broke through the resistance. And then I entered a second trade. And then here, I was like, this, I'm not going to fight this. So I took a loss, and this is how the loss looks. So I'm looking at this, and I'm seeing this red, I'm just seeing this red drop, boom, and it just took away all my pips. And so my pips are in the negative, but that don't really matter. I'm still up 23%. Now, I want to talk to you about taking a loss. It was not worth holding on to a losing trade. Now, I know how to trade the market. What's the point of holding on to a losing trade when you know how to make market? Take the loss and you'll be able to recover your loss. The worst thing that can happen in the market is to blow up your account. And it's not worth blowing up your account, especially when you know how to make winning trades. It's not worth blowing up my account, right? And so I decided I was going to take the loss. I will recover the loss. There is no doubt about that. You have seen me taking losses before. Last year, I had two losing months back to back, October and November. And then bam, in December, I recovered. Then I continued December, January, February, March, April, May, June. So I'm up. Just take the loss, cut your losses, and then let's go again. Because this same instrument goal that I lost money on is going to give me back, it's going to pay me back. I'm telling you, this is going to pay me back. So the plan, here's the plan. If the Feds cut interest rate on July 31st of this month, that's when they're going to make their interest rate decision, I will look to buy gold. If I do not buy gold, I will look to sell the US dollar on a US base pair. That's as simple as that. If the Feds do not cut the interest rate, then I will look to sell gold. I will look to sell gold. But I will recover that loss. It is minor, right? And the question that I should ask myself, I question that, if I were to walk away from trading now because of this loss, will I still be profitable? Hell yes. I have doubled, as a matter of fact, I've tripled my initial investment in this market already. So if I should walk away right now from trading, I'm still profitable. I'm up right now 195%. This was over 200%, but because of the loss, it dropped. Right? I've already doubled my account and just a little bit shy as it is right now of tripling the account. I don't have anything to lose. Take the loss. Let's start again, look for new trades. So you have to learn how to take the loss. It doesn't mean that the world is going to fall down or anything like that. It just means that you lost. But you were wrong. I was wrong. And so I took the loss, understanding that I was wrong. And then I'm going to regroup, right? And I'm going to continue to apply the formula. Why? Because success in trading is not a fantasy, it's a formula. And for the life of me, as I've come to say to myself, I thought I was a disciplined person until I started trading. I do not know why I don't stay away from gold because my formula doesn't too much involve, my primary formula of trading does not involve, right, these metals like gold and silver and platinum, but they're very lucrative. You can make money very quickly from them. So sometimes I tend to look at them. and stuff like that. So it's just something to learn from and stuff like that. Don't take the loss, take a break if you need to from trading, and then you go back and stuff like that. It's not the end of the world. The losing percentage won this time around, because if you look percentage wise, if you count the number of times the market came to this, how many times did the market ever break out from this resistance? If you look at it technically, I just want to show you that the losing percentage one. Right here it fall. So it touched it so many times here from way back here. So if we count here and here and here, you will see that we have 1, 2, 3, 4, 5, 6, 7, so many times, and the resistance held, right? Only this one time the resistance did not hold. So it simply means percentage wise, this market was expected to fall, but this time around it did not fall. It broke through the resistance, and that's a part of trading. The losing percentage one, it means that you're not supposed to stop believing in your strategy, because the strategy works more often than it does not, and that's all you need in trading. Something that works 70% or more of the times, and you're good. That's the formula. All right, so just keep those things in mind. The formula does work. Stick to your formula, stick to your strategy. Once the strategy itself works, then in the long run, over 100 trades, not over 10 trades or 5 trades, but over 100 trades, if the formula works, then it will work. And for the most part, if you place 100 trades, applying your formula, it will work more often than not, and so you will make money. All right, so don't get worked up about a losing trades, a part of the game and stuff like that. I'm still profitable. I'm up 23% this year, so I'm still positive, and so that's a blessing. All right, and remember, it is God who gives you power to make wealth. This is Ed FX Trader signing out.